Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond over the Contrarian Trader, and it is the 23rd of July. So how was our week last week? Well, we did very well with our swing trade of NTDOY, Nintendo company. Everybody's heard about the Pokemon craze, so we decided to try to make a profit off of the unsustainable move higher that Nintendo investors were enjoying. And this is what I like to call an extreme overbought trade. And if you take a look at my review of eBay, which is a best stock chart, I go into a lot of analysis about the trade currently being in progress. And I'm going to put out a part 2 of the trade after I close out the position, whether it be a profit or a loss. I'm going to follow up and discuss the outcome of the trade on eBay. So check that video out, NTDOY. What we did here was that we use the same criteria that we always do. It's rinse, wash, repeat, always the same. We ran our scan. NTDOY came up as an extreme overbought stock. We saw that RSI was above 90 at the time, that it was leaning into its third standard deviation Bollinger Band. What concerned me was that volume was still very, very high on the shares. A lot of momentum buyers, shorts getting squeezed. But I also took note of the lower high on Ultimate Oscillator. So we saw a bit of a divergence. We also took note of a possible double top on ADX green. But was this really a sufficient reason to go shorting the stock with the muscle, the momentum that Nintendo has with the Pokemon craze? No way. What we needed to do was to, as we always do, multi-period charts. What we needed to do is to pull back, go to a higher level time frame. What does that mean? Well, this is a daily chart. What I wanted to do was pull back and take a look at either a weekly chart or a monthly chart. I opted for the monthly chart, so let's take a look at it. What you'll see here are these 3 lines, and I drew these lines. You take your crayon out and you draw your resistance levels. Because it's at those levels, as a technician, you'll appreciate the fact that there are sellers above, and we wanted to short into where those sellers might be. So we opened up a position on July the 18th at $37.84, just shy of $38.60 last seen back during the month of February of 2011. And then the shares just drop off of a cliff at that point in time. So you know for a fact, those people who held these shares throughout this big bear market on Nintendo, they wanted their money back. They don't care about the Pokemon craze. They don't care about making a profit. All they want is their money back. So we began opening a short position, again, at $37.38, just shy of that resistance level. I would have added more had we hit it. So this, which along with the daily chart with RSI above 90, and leaning into its third standard deviation Bollinger Band, which in short means it's not supposed to be there. Highly unusual. So this inefficiency in the market is what we took advantage of on this extreme overbought trade. Within one trading day, we opened up our position on 7/18 right here at 37.38. We booked profits right down here, filling the gap at 33.52. That's a little over 10% profit, or $3.86 per share. So a very good trade. And this is typical of the type of extreme oversold trade that we like to do. And again, I have a eBay trade in progress. Take a look at that link. There's a link to the video on the homepage where I go into great detail of our analysis of eBay. That position is still open. I will be doing a part 2 about the outcome of the eBay trade, whether it be a loss or a profit, I will be doing a video on it, because even if it's a loss, there's something to be learned. So please check that out. And you may be asking, before I close this out, why did you book profits? Or why didn't you wait for it to come down here, where it closed on July the 22nd at $29 per share? Well, that would have been great, but I'm not in this business for hope. I'm in this for fear, meaning I know that the probability of filling the gap and these shares rallying was very, very good. And you could see that on the 19th, when we closed out that trade, the shares rallied back off of support. Now, the next day, they just happened to gap down, and if you remained short of the position, good for you. But really, for me, it's not worth the risk, because I live by a credo. And that credo is this: when you're trading extreme stocks, whether or not it be extreme overbought or extreme oversold, weak stocks tend to get weaker and strong stocks tend to get stronger. If you appreciate and respect that adage, you'll make a lot of money in this business. So we filled the gap. We booked our 10% profit within a 24-hour period. You can't complain about that. So first out, best out. We move on to next week's trade. Let's talk about another extreme overbought trade, Tops Ships Inc., TOPS, the symbol. You can see that for the longest time we've been in the trading range. We broke out of the trading range at $2.50. That was the upper band of resistance, and we just shot higher. Now, much of this is a short squeeze. How do I know that? It's because when you have a breakout of this magnitude, and if it's an institutional buyer, they will open a position on the breakout. They'll wait for a pullback and a retest before they get highly aggressive, because what was a resistance level during this entire time frame should now, on a pullback, act as support. It's a validation by the marketplace that their decision to get long of the shares is accurate. It hasn't done that yet. And you could see that you have new weak shorts that are out there, and they're not appreciating the price action right now and the catalyst that's driving these shares higher, and they're trying to short into this strength. That could be a mistake, because this is a stock that trades with a dollar value of $5 per share, thereabouts, between $4 and $5 per share. The rule of thumb that I have is that a stock that trades below $5 per share can easily see RSI above 90. So even though we have RSI at 86.19, it's not overbought enough for me. So I'll be waiting for another push higher on TOPS before I open up the position. Why else am I a bit concerned about shorting the shares on Monday? The reason is this. Take a look at your volume bars. While I mentioned earlier that you have a lot of short covering, you do have some institutional money moving into the shares. I don't want to fight these guys. This is Goldman Sachs. This is Fidelity, Vanguard, etc. I don't want to fight these guys. So we want to wait for the shares to move higher on declining up volume, and then we'll revisit it. We also want to take a look at historic resistance. Where do we have friends that will be looking to get made whole again, because they've been sitting through this nightmare right here at about $7 per share? That's where we have some friends. Otherwise, from a longer term perspective, I think that TOPS is looking good. After we get this pullback and we have an orderly consolidation, I think that the shares could quite very well move higher. Especially, this is a monthly chart, remember. We are trading at current above the upper band of resistance on this monthly chart. Now, the month isn't over yet, but if TOPS closes above this upper band of resistance, we'll be looking for it to become a possible investment stock, because this would be, assuming that we open up August above this upper band of resistance, a highly qualified stock to invest in for the longer term. Or if we find a stock in this sector that has similar price action yet has better fundamentals, that will go to that stock and invest in it rather than TOPS. So more to come on TOPS, members. SPU, Sky People Fruit. I tried to short it back here. I mentioned this last week. I discussed it with members as well. I tried to short it. There were no shares available, and the stock pulled back and just took off once again. So we'll be looking to short it. I don't know whether or not I'm going to get the shares. Very, very difficult to short. Volume is dropping off. The indicators still look good. RSI 86.63. It can go higher. So SPU looking very interesting. It has completely gone parabolic. And folks, this is an unsustainable move higher. I don't care if they found the cure for cancer. It's going to get a pullback. No doubt about it. Just like people didn't want to believe that it was going to pull back off of the 740 level, it did. It pulled back significantly. And it will do the same very, very soon. So SPU is on our watch list as a short. Monthly chart of SPU. Remember, we always want to use multi-period charts. We don't want to use simply the daily chart. That's for suckers. You want to use your higher level view, weekly charts, monthly charts, then daily charts, then your intraday charts for timing. And the timing charts I'll go over with members. So at current, on this monthly chart, the month isn't over yet. We're trading above the upper band of resistance. If it closes there, it could push higher, considerably higher, up to $16.88, but that's not going to happen without a pullback. My guess is that the shares pull back prior to the end of the month. They close back down below $12.40. Where do we close out? We closed out $14.25. That's my bet on SPU by August the 1st. Next chart up, OSCH. No historical support above, so no monthly or weekly chart to review. The shares have spiked up. It's in an ascending wedge formation. RSI at current 87.19. This is a thinly traded stock, so we really need to make sure that we have an excellent entry point from a risk to reward perspective, because if we're wrong, trying to get out of these shares is going to be an absolute nightmare. On Friday, it only traded 30,000 shares. That's crazy. So we need to make sure that we're looking at RSI ideally above 90, and that we pay a lot of attention to the intraday charts, looking for intraday divergences that haven't appeared yet on the daily chart. That will give us an edge. Now, I think that it's quite possible that we break out above this upper band of resistance. And if we do that, not quite sure how high it'll go because we have no historical support. We will be looking for, on the 2-hour chart, the 30-minute chart, intraday divergences. So members, more to come on OSCH, which is a possible short. All right, eBay. I did a very, very in-depth video. I mentioned this earlier about eBay. If you just clicking to the eBay link and you didn't hear the prior commentary about eBay, we are currently short of eBay. We opened up a position on Friday. And click the link that should be right in front of you right now. It'll bring you to my commentary, part 1 of my commentary of eBay, and I'll walk you through the process of how we go about shorting extreme overbought stocks. And I'll be doing a part 2. Whether or not it is a profit or a loss, I will be doing a part 2. Enter your email address. It'll come out to you via email, the part 2, and you will not be spammed. I can guarantee you that. We hate spam too. So just click on this link here and you will be redirected to my part 1 video on eBay, the trading process. And members, we're going to go over the 2-hour chart on the week ahead commentary immediately following best stock charts. So stay tuned. We'll be talking about the intraday setup on eBay, what we're seeing, and what our game plan is moving into the coming week. Okay, now for our extreme oversold stock, ESND, Ascendant Inc. Daily chart, we're trading with RSI 17.99. It can go lower. We are trading below the 3rd standard deviation Bollinger Band, which is not in and of itself a reason to go buying the shares. But when you take the 3rd standard deviation Bollinger Band into consideration, along with RSI being below 20, then it becomes very attractive. So we saw a dead cat bounce on Friday, but they sold it off rather quickly. So we know that the high of the day was 21.33. What we can gather from that is that there are sellers above at that level. That is now resistance. In fact, let's update the chart to reflect it so we don't forget it. Okay, here we have it, resistance. So we know that there are sellers above, and in a situation, what we want to do with a stock like ESND is do exactly what we did with the extreme overbought stocks. We want to take a look at the higher level view. What's the higher level view? We use multi-period charts. We go to the monthly chart now. And you could see that back here in February of 2015, the markets sent you a signal. We had put in a high of 44.96 back in October of 2013, went through a long consolidation, good basing here we found a low at 34.26, and then we rallied once again. But the markets told you, and I always tell members this, the test is always at the top, meaning as we approach prior highs, will we break out or will we break down? The test is always at the top. We put in a lower high. That in and of itself is not necessarily a reason to close out your position, maybe scale back a bit. But when you should have closed out your position was when the shares closed down below the 34.26 level. That was a confirmation breakdown. The markets told you, get ready, put your hard hat on. The shares are going a lot lower. It was a big breakdown. We can complain as much as we want about the markets being rigged, algorithms this, front running that. Forget all that stuff. Watch the charts. Learn the charts. It levels the playing field. Now, do I believe that the shares are done going down? Probably not. I believe that we'll probably see a rally, which we'll try to profit off of. And then we're going to break down further because these Stokes are butt ugly. They are rolling over once again. Volume so far this month is much higher than the moving average, and we still have several trading days left to go. But the optimistic part here is that we are trading down below the lower band of the declining downtrend channel. It's overdone. We bounced off of and closed above prior support at the $20 per share level. That's bullish. So we know that we have friends below, support below at this support level. If the shares trade below this support level, that's our stop loss point. We know that if it breaks down below the support level, it's going down to $17 per share. Why fight it? The trend is still down. I may be a contrarian, but I still believe that the trend is your friend. So we can take advantage of the shares rallying, which I believe they will in the coming days, and in all probability thereafter roll back over and resume its downtrend. But there is a short-term swing trade to be had here. Members, more to come. Palo Alto Networks. I spoke about this one a week or so ago on Best Stock Charts. You can go back, take a look at it on the website. It's free to watch. It was a watch stock then. It's still a watch stock. I like the price action. It's consolidating, holding support. Good stuff. Volume could have been better on Friday. You're seeing higher lows get put in an ultimate oscillator. Stokes hooked back up. Good stuff. I think the shares will probably rally in the coming days. More importantly to me, though, is that the shares broke out above the upper band of resistance on a weekly basis. Higher lows getting put in on RSI, and they're hooking up. So in all probability, we will be looking to open up a long trade on PANW very, very soon, probably next week. LABU, the Direxion Biotech Bull ETF. This is a leveraged ETF, folks. So not for those who do not like volatility. So on a daily basis, we rallied once again through resistance at the $35 per share level. It's really given up this real estate a number of times. So it's a bit of a concern whether or not it'll hold it. The 3-day rule is in place. What's the 3-day rule? The 3-day rule is when the shares break out above resistance, they must spend 3 consecutive days above that level. It doesn't always work. It didn't work here. It didn't work here. We'll try it again with a stop loss right below $35 per share. Volume was light on Friday. So the price action on LABU looking good. Love the Stokes. Whenever I see a hookup on Stokes like this, well above the 50 level, that's a sign of strength. And you haven't seen that in quite some time. In fact, the last time you saw anything close to it was back here in 2015, and you had a nice rally. Gold. All right, we'll talk briefly about the daily chart. I have my concerns about gold. I am long of the precious metal names, have been for quite some time. I am not currently long of gold. I am long of the gold mining names in a leveraged ETF, and we have done really, really well in 2016. Now, for gold anyway, we pulled back and retested the lower band of support. We flashed a bullish reversal off of support. That's good stuff. Friday was an inside day, meaning no new high, no new low. That wasn't wonderful. I didn't like that. I didn't hate it because we closed above support, which is very important, and volume was very, very light to the downside. But to be fair, and not to delude ourselves into thinking that gold is going to go skyrocketing to the moon, up volume on Thursday was not great, despite the fact we had great price action. What concerns me a bit here today are the stochastics. They're going below 20. That's a concern to me. Now, if we hold support, I won't care about the stochastics. But these Stokes, the most damage gets done on a stock when the Stokes go below 20. Not when they're above 80, when they're below 20. And that goes for commodities and ETFs as well. Taking a look at a weekly chart, we did hold support at 125. Very, very critical. We are in a bull flag formation. We may get a breakout next week, but the dollar is a concern to me. The dollar is behaving very, very strong. Members, we're going to talk more about the dollar and our precious metal plays on the week ahead commentary immediately following best stock charts. Okay, weekly chart. GLD did a nice job last week. It held on to support at 125. Very, very critical. It also closed above its 200 period moving average, and it also closed off of the lows of the week. Good stuff. So ideally, we get a bull flag formation out of this upper band of resistance. Next stop should be an attempt to break out above the prior high. Again, remember, the test is always at the top, 131.15. Volume to the downside last week, very light, good stuff. Lower highs, though, on ADX. That means that the trend is kind of weakening a bit, but no reason to go selling until, of course, we get a rally, a lower high, and then a break below this recent support level. Okay, members, we're going to begin the week ahead commentary off with market pulse check. And we're going to begin with a chart of the S&P price to earnings chart. And you can see that we are breaking out on the S&P, which historically has a PE of about 17. But in this case, we are breaking out above the upper band of resistance on price to earnings quarterly basis. And this is as of July the 22nd. So what this tells us is that earnings are not coming out spectacularly. In fact, they are declining, forcing price to earnings higher, making stocks more expensive as they break out into new highs. Why does this matter?